Hello traders, today is the 10th of February. My name is Neville Hornsey, market actually trading, and today I'll be taking a look at the gold silver ratio. Okay, before we get into the precious metal charts, just looking at the US inflation rate. Here it is year over year at 7% and rising. It's due in today to come in higher. We had a big drop down in inflation from the GFC, and we also had this drop down here in the sort of COVID pandemic. But since the bottom in May 2020, it's been rising rapidly. Now, FinTwit are going to be saying that you should be buying gold to have a store of wealth to keep your purchasing power high. If we overlay gold futures chart, for me, there is a little relationship, I guess, between the gold and the year-over-year inflation rate. We saw a peak here in 2011, both in gold and inflation, and then it dropped down towards a trough in 2015. Then we have been rising since, both in inflation and gold. But when we have like a steep decline in inflation, we don't really sort of see a steep decline in gold. So yeah, there's not a clear relationship. It's just the general trend in gold is to go higher. And at the moment, inflation is going higher too. If you want a closer relationship, especially of late, then I would look for inflation to be related to oil prices. Obviously, when we get peak oil here, back in 2008, it collapsed the economy. And once we reopened after the big crash, a year or so later, then we saw inflation rising and oil prices rising. Again, as oil dropped down dramatically, we had a big drop in inflation. And again, here you see inflation dropped as oil went lower. So for me, inflation and oil, based on whether or not the economy is sort of collapsing or opening and expanding, is a better relationship. So if you're looking for peak inflation, look to see if we've got peak oil first. All right, going into the gold and silver. Here we have gold in the orange and silver in the silver. And for me, we had a big dip down in 2020. We took out some liquidity within this double bottom around the $22 mark in silver. And then we had a big push up, and then we've sort of started to form this sort of bull flag, if you like. On gold, we've got more of a pennant. So traders are looking for gold to come to the sort of apex of this triangle and then pop out the top and carry on in this bull move. So we're looking to sort of see if we can get gold and silver to sort of break out of these consolidation periods. Now, the gold silver ratio is a ratio which states, how much silver you need to convert into 1 ounce of gold. So currently, if you had 79.98 ounces of silver, you'd be able to purchase or convert that to 1 ounce of gold. Historically, anything over 100 is a high ratio. Anything below 50 of recent times has been a low ratio. So what does that mean? So if we have a high ratio, when it sort of pops out of the volatility norms, then you can sell your hypothetical 1 ounce of gold. And at this point in time in 2008, you could have bought 80 ounces of silver. Now, that's just like for like. So you don't monetary wise make any more money. You just accumulate 80 ounces of silver. Then when you wait for a trough in the gold silver ratio, so here you can see from a peak to a trough here, your 80 ounces that you converted back in 2008, if you were to take those 80 ounces now in 2011, you could purchase basically around 2 ounces of gold. Then if you were to hold on to those 2 ounces of gold, hypothetically, all the way up till the next peak in volatility, where we have like a big push out of this these bands here, then you could take that 2 ounces of gold and you could convert it into more than 200 ounces of silver. So from 2008, where you had 80 ounces of silver, you now could potentially have more than 200 ounces of silver. So for anyone that's looking to then, wait and then purchase gold, you wait for a dip down out of this low volatility bands. And then once we get a trough again, then you could convert your silver ounces into more gold. So assuming you've got 2 ounces sorry, you've got 2 ounces of gold equivalent, which was 200 ounces of silver up here. If we were to come back down, your 200 ounces could then, at say the ratio of 50, buy 4 ounces of gold. So you would have gone from having 1 ounce of gold in 2008 to say potentially 4 ounces of gold this year, should this gold silver ratio come lower. So that's how stackers use the gold silver ratio to accumulate gold and silver. They just convert when the ratios are high or low. I hope that makes sense, and I'll speak to you again tomorrow.